Hello and welcome to The Banker. I'm Silvia Pavoni, economics editor of the magazine, and I'm talking to Leslie Maasdorp, who is the Chief Financial Officer of the New Development Bank.
Thanks for having me, Silvia.
So I want to talk to you about development finance. Of course, the New Development Bank was born and became operational in February 2016. So it's still a relatively new organization, but it's very much a different organization, set up, as we know, by the 5 BRICS countries: Brazil, Russia, India, China, and South Africa, US South African national. It breaks, in a way, the rules of the traditional Bretton Woods institutions and development finance, because you don't really have the dichotomy of the donor countries versus the borrower countries. These are all one. Is this the way forward when thinking about development finance?
The New Development Bank was started by the 5 BRICS countries, which are all emerging markets and systemically important emerging markets in the world today. However, the intention has always been that whilst BRICS will continue to be the principal shareholders of the bank, that over time the bank will change its character. So at this stage, we are, if you like, almost like a borrowers club. You know, the borrowers are also the lenders. Each country put in $2 billion of capital as equity or paid-in capital, and we also have $40 billion of callable capital. So our subscribed capital base is $50 billion, and that structure is the same as all the other multilateral banks in terms of how the capital structure works. The bank will, in fact, in 2020, we will make announcements in this regard when the BRICS leaders meet around our intention to expand membership beyond these BRICS countries. So we intend to bring in borrowing countries, and that process will take time. As you know, for countries to join, they have to sign a treaty. There's a series of negotiations that take place. They have to sign off at the level of their Congress or parliaments or senates, whichever the highest decision-making body may be. So it's not a process that you do overnight. But once the process has been triggered, it will be irreversible, and we will have a sustained process of new countries joining over time.
I would like to ask you about the role that development banks play in working with the private sector. So this is something that, of course, a number of institutions have done, multilateral institutions have done. Is it something that the NDB also will look at, and is it, again, the way forward? So should development banks work more and more with the private sector to crowd in private investments and capital?
Absolutely. I mean, as you know, the World Bank, way back when it was started in 1944, focused exclusively on lending to the sovereigns. Governments typically were at the center of the provision of public infrastructure, whether it's the building of roads and ports and airports and bridges and so on. Over the years, the private sector has begun to play a much more important role in economic development, with the formation of the IFC in the 1950s and many other private sector arms. Over the last 10 years in particular, there's been significant shifts within the multilateral development banking space, where there's been increase in the focus on the private sector, and more so in the last 5 years or so, because there's a recognition, Silvia, that there's no way that the development community will achieve the 2030 sustainable development goals unless we crowd in and mobilize more private sector funding. Governments are restrained in terms of the available public resources, and there's an acceptance that we have to, if you like, carefully and more efficiently allocate the available public resources and find ways to make it possible through improving the sort of risk-return profile of especially infrastructure projects to bring in greater volumes of, obviously, private sector money. And this is now the big focus. What we have done as a New Development Bank, we started in the first few years. We started at zero in July 2015. Today, we've got a loan book of $21 billion after 5 years, and 85% of our book is underpinned with sovereign guarantees. We aim to have a 70-30 split, meaning 70% focused on public sector, 30% focused on non-sovereign, as we call it, which is really private sector. But over time, that 30% is going to grow. And that is the focus of most of the multilateral banks today.
So you mentioned sustainable finance. How difficult is it to actually being able to pinpoint which projects are sustainable? What kind of criteria is necessary or missing to allow you to do so? And does the criteria change depending on whether you're working with governments or with the private sector?
Sustainable development, as you know, is at the heart of multilateral banks, more so for the New Development Bank, also for our sister institution in Beijing, the Asia Infrastructure Investment Bank. These two very new multilateral banks, both created in 2015, we actually have sustainable development in our very DNA because our Articles of Agreement, which is the legal statute that gave rise to us, contains the word sustainable development. So both on the asset side, in terms of the loans we provide, sustainable infrastructure is at the core of it, and also on the liability side, when we raise debt, when we go to the international capital markets or domestic capital markets, we raise money typically in the green format. So we issued our first bond as a green bond in 2016 July, where we became the first multilateral bank to issue a green bond here in the Chinese interbank bond market. The criteria has become very, very specific. And there are shades of green, as you know. You can be green, but you can also be sort of dark green, if you like. So we have applied and we continue to apply very rigorous criteria to assess the green and sustainable component for each of our projects. In other words, we do detailed analysis of the environmental, social, and governance characteristics of each project in order to then inform our scorecard. Because all of the banks today, Silvia, they have to report on development impact. They have to show and demonstrate that each project contributes to reduction in emissions, that it contributes to, for example, clean and green power, and enhances a overall reduction in carbon emissions.
What's the point of view of the New Development Bank? Would you rather go for a very bright green kind of project? So do you think that the way forward is to fund the transition and finance the transition, and therefore also work with companies and issuers and projects that may continue to be flagged as polluting?
South Africa, Brazil, India, China, if you just look at the energy systems, right, it is so dependent on coal. It is such a carbon intensive energy system that we have. So we cannot move from the perspective that we want to, significantly bring in renewable energy. We have to look at a transitional plan to move these countries to a better profile when it comes to overall emissions footprint. So our view is that you can't be too much ahead. If we want to lead, you have to be slightly ahead, but you can't be, 10 miles ahead of everyone and no one is actually following you. So we want to work with our countries to enable them to adopt the latest available and best practices in terms of technologies, to adopt those technologies to reduce the emission footprint, and over time, bring in more, for example, renewable sources in terms of hydro, offshore wind, solar, and other sources.
So we can expect even larger funding towards this.
Absolutely. Yeah. And also more coordination between the agencies. Because remember, the $1 billion we have provided to, let's say, China or India or South Africa, that's as small as a drop in the ocean in terms of the need for economic response programs to deal with the massive job losses and the massive economic dislocation that has taken place. So we need to look at how can we amplify our efforts with better complementary efforts with other institutions. So let's take South Africa. South Africa has a loan from the World Bank, from the Africa Development Bank, from ourselves. We can magnify our impact if we work in a more collaborative fashion, and that is indeed what we are doing.
Very well. Thank you so much for your comments, Leslie.
Thanks for having me.